Hi friends, today let's see the issue behind the FRDI bill and why the government has decided to withdraw it and what are all the reasons to withdraw. I think everyone came across the recent news report of government withdraws the bill. The report is after 12 months since its introduction in Parliament, the Parliament withdrawn the FRDI bill 2017. In this bill, especially generated the greatest debate and attracted the strong criticism is bail-in clause. Government tried to explain the rationale for the bill as well as the bill safeguards relating to the bail-in provisions. But it has made little headway and finally the government decided to withdraw it. And why this become controversial? Let's see about this. Till now, the issue when the bank's under stress or when the bank is facing problem, then the promoter means government will take care of the stress. Let us take the public sector banks like SBI, Bank of Baroda, PNB, etc. The government came up with rupees 2.11 lakh crore through recapitalization plan. The health of the PSB is not satisfactory because of NPA. Under the circumstances, the center came to rescue of the stressed banks because the largest shareholder of the public sector banks is the center, means government. So therefore, center came to rescue of this public sector banks. Accordingly, it unveiled 2.11 lakh crore recapitalization package applicable for 2 years. Let's see what is contemplated in FRDI bill. In FRDI bill, there are two aspects. First aspect is with applicable with banks, both public and private banks. Let's see with example. If you are depositing money in the public sector banks and when the public sector banks are under crisis, they can convert our deposits into shares. That means if you deposit 10 lakh rupees into the banks, the part of money converted into bank shares, and if the banks are into problem, so that is the part of the resolution of financial institution. And there are several safeguards which our banks cannot convert directly our money into shares when they are into problems, but even then it created anxiety among the people. That's why the trust of the financial institution in crisis. So under the circumstances, the government decided to withdraw the FRDI bill. So here the controversial clause is bail-in clause. Here bail-in clause means when banks are under stress, then the banks can be rescued with the depositors' money. Till now banks are saved by promoter money, and as per the FRDI bill, banks are going to rescued by depositor money. For example, if we deposit 10 lakh, 5 lakh will be converted into share. So the depositor will get 5 lakh plus some shares of the banks. If the banks are into crisis, so this is the financial resolution through the bill in process contemplated by the government in the FRDI bill. But it created lot of mistrust among the public. If you see second aspect of FRDI bill is at present we are having Depositors Insurance Credit Guarantee Corporation and it is wholly owned subsidiary of RBI. The DICGC looks into the insurance of the depositors. If we deposit money in bank, then if the bank collapses, then our deposit got insured up to 1 lakh. That is the purpose of DICG. As per the FRDI bill, the DICGC will go away. And there are two issues by withdrawing the bills. First issue is how to resolve, that means how to look out the resolution of the financial institution. So that is the important point the government has to resolve. Here everyone will think about insolvency and bankruptcy code to resolve the issue of resolution of the financial institution. But the thing is, the insolvency and bankruptcy code applicable only for companies, its corporates, as well as the limited liability partnerships, individuals and partnership firm, but not for the financial institution like banks, insurance companies, etc. Because if you see the banks, insurance companies, they are just financial intermediaries. And so the important point to note here is insolvency and bankruptcy code will not resolve the resolution of financial corporation. This is because of the reason banks' failure can pose a big risk to overall financial stability. So this is the first issue government have to resolve. And second issue is with regard to guarantee provided through Depositor Insurance Credit Guarantee Corporation. If you deposit money in bank, if the bank collapses, then DICGC is guaranteeing the deposited money up to rupees 1 lakh only, and this amount is not reviewed since 1993. So there is a need to review the DICGC insurance. Now the things have changed. So there is no point to keeping as rupees 1 lakh, and note one thing, DICG gives insurance to deposit and premium for the insurance paid by the concerned bank. So these two issues have to be resolved by the government as FRDI bill withdraw. Now the onus is on the government to prevent further erosion of public faith in the banking system. Thank you friends.